Hi everyone and welcome back. You're watching The Money Show on ET Now. The IPO, the initial public offering. This is when a company comes to the market, that's the BSE and NSE, and offers its shares to the public for the very first time for it to be traded on the bourses. Now naturally, since it's the very first time, we don't have much in terms of their financial history, in terms of how they've grown, the management, pedigree, etc. On record, because this is the very first time that they'll be going public. So it's from now onwards that we will have all of this information. But it's always good to sort of check up on their history, on their financial records, to know how the company has done and then make a decision. So that's where really an IPO gets tricky. And all the more the reason why we're discussing this topic is because we have two ongoing IPOs, Root Mobile and Happiest Minds Technologies, and we have, I guess, at least 4 to 5 more coming up in the next 6 odd months. So let's then take forward this topic with Siddhartha Khemka, the head of retail research with Motilal Oswal. Siddhartha, thank you so much for joining us today on The Money Show. So to start with, when a company says that, look, I'm having an IPO and Siddhartha, I would like you to subscribe, just hypothetically. What is the first thing that you would check on before saying that, okay, you know what, I will subscribe to this company or I will avoid for now?
Yeah, good evening, Movina. Thanks for having me on your show. It's a pleasure. Looking at companies which come out with the IPO, what needs to be looked at? So the only difference between a normal company which is already listed to a new offering is that it's the first time that it is being available for the investors to invest in. Till now it was a private company and going to become a public company. And the price at which we can buy, once it gets listed, it joins the leagues of others who are already listed. So the core research that we do or that we look into before investing in any company, the same research goes into any new offerings as well. So we look at the company's business model, the management pedigree, the management track record, you look at the financials, and finally, and the most important factor in an IPO is the price at which the offer is given to the public. Because unlike a listed entity where the price is determined by the demand and supply of the investors, here the price is in a band which the investment bankers and the promoters and the management decide, and we have to bid within that, whether it is expensive, whether it is comfortable, whether there is a discount to the fair value. That determines whether one should go on and subscribe to the IPO.
Well, I think all those factors that you've mentioned, I guess investors are really liking it in Root Mobile, because we've just got the news that the IPO has been fully subscribed and today is just the first day of subscription. So maybe I think Root Mobile does at least tick the check boxes for a majority of investors in India, fully subscribed from the first year of sale. So that now you know the DRHP that's on SEBI, available on SEBI's website, which a company is supposed to file, the red herring prospectus. It's hundreds of pages long with a lot of information and a lot of jargon. So which from the list of from the index of contents, which would be the topics that you would sort of skim through first?
Yeah, it's a very pertinent question, and all the more important because there are IPOs where the RHPs run into hundreds of pages, so 400, 500 pages, and they have got all the details. What we start with is first about the company to understand what the business model is. Then we look at the financial snapshot. Third, we look at the objects of the issue, why the company needs to raise money, whether it is an offer for sale by existing promoters or by some institutional investor or an exit by a PE. That gives some insights as to what the company has done, and say maybe if the company needs the money for a capex, which means that there is a future growth demand driver which the company needs to meet. And finally, and one of the most important part is the risk factors which are listed down at the beginning of the RHP itself, which lists down a lot of factors pertaining to the industry, pertaining to the company and the promoters and management. So it gives out, as you rightly said at the beginning, that these are the first timers We have not tracked them, so they were not under the public scrutiny. We don't know a lot or history about these promoters, these management. So the risk factors helps us to understand anything on the history of the company, or they may have done or they may have not done, and things like that.
Okay, all right. I think that'll give a good guide as well for our viewers to start off with if they want to check out the DRHP of the forthcoming IPOs. Siddharth, anything if you could share with us perhaps some examples without of course naming the company, but anything that you would consider, okay, this is a red flag and maybe I should not subscribe to the IPO for now. If you could perhaps share with us with some examples, so that'll be easier for our viewers as well to understand.
Yeah, sure. So if you look at, as I was telling you, the objects of the issue, a lot of times we see that companies that come with an IPO is entirely an offer for sale. And the offer for sale is from the promoters and the valuation is very high. So that to my mind comes as a little bit of red flag to an extent that if a promoter is exiting at a higher valuation, is he not looking at the future growth? Why is he looking at so much of exit? Why is only listing an important factor for him? Compared to that, if you have a PE firm exiting through an OFS, it makes sense because we know that the PE has a definite period of investment. They have to take an exit. They were part of the initial growth story and they now need to exit, and that is where the public investors get into a company, and that leads to an opportunity to enter into the company. Some of the other red flags that can be seen is specifically relating to the financials. If you look at some companies just before the IPO, they show a very good or sharp improvement in the numbers. So suddenly you will see that last 2 quarters, the revenue growth was very high. Margin sees a sharp improvement in the quarterly numbers and just before the IPO. So that raises some kind of red flag whether the management is inflating the numbers just to attract investors into the IPO. And minded that quarterly numbers are to some extent adjustable, and once we have the final audited annual report, these numbers can get adjusted because some of these are provisional, some of the expenses gets deferred, some of the revenues are pre-booked. So you will see that the working capital cycle becoming stretched, and that is all raises the red flag to my mind.
The first point that you mentioned about, why the IPO is happening and what this money is going to be utilized for, I think it has some very, it's got a practical connotation as well to it. I mean, think about it. For all the viewers who are doing business, you're doing your business because you think that there's growth and you're going to earn profit, you're going to earn good revenues from your business. But if you don't think so, then, or rather, if you think so, why would you be, selling off a part of your business to somebody else, right? I mean, you do not want to exit your business. You want to be there, but perhaps you want to expand your business, but you're looking to the public to give you some funds to expand your business. If that's the case, then that's good. But if there's a complete exit by the promoter, that would be, I guess, a red flag. And I guess it's just logical business sense. So thanks, Siddharth, for that. Siddharth, let's see then if your checkbox that you have mentioned of what you would look at in an IPO, does it resonate with Root Mobile and with Happiest Minds Technologies? If you could just share that with us.
Sure. So as I said, there are 4 to 5 checkboxes. Starting with Happiest Mind, the IPO is almost over. We are, I think, now at 5 p.m. or 6 p.m. it gets closed. And we have seen a record, a very high interest from the market. So starting from the business model, Happiest Mind is into the IT services business, but it is a digitally focused business with being one of the latecomers or new entrants into the IT services. The promoters have, or the management have focused on the digital business, and 97% of the business comes from the digital services compared to some of the other mid-sized IT companies which are already there trying to get into digital. So they have reached 50, 70%. and for tier 1 it is even lower because they have a much diversified product profile. To that extent, if you look at the business is niche, the growth is very strong. That ticks the box on the business front. Then you have the management or the promoters. Here, Mr. Ashok Soota has been associated with Wipro, and on the initial days when the business just started, took it to a new height, then moved on to form Mindtree along with some of the other co-founders. Again, the business reached new highs, and now this is the third venture where he is associated. So a very good track record, man. The market believes in this guy, and that is shown in the interest we have seen in the IPO. So the management quality, the business quality, both get staked. The financials have seen sharp improvement over the last few years. We have seen growth in the revenues. Margins have seen a sharp improvement over the last few years. If you look at on the EBITDA front, the EBITDA margins as well as the PAT margin, FY18 there was a reported loss. From there they have turned around and they have reported almost 80 crores of net profit in FY20, which is almost 3x of 25 odd crores that they reported in FY19. And on back of that, the return ratios have seen sharp improvement to almost 35%. So financials are good, and finally with this improved financials, the valuations appear comfortable on FY20, a 29 times PE. On the first quarter, if you analyze the numbers, it is 12 times. Obviously the growth on a low base is high, but it is very much comparable to other IT players. So I would say that niche, digitally focused IT company with a strong promoter management, healthy financials, and finally valuations are comfortable. So ticks all the boxes for me in Happiest Mind Technologies. Yeah.
All right. Well, there you have it. I guess, Siddharth, we'll reconnect with you once, we get all the other IPOs as well going on the street. But thanks so much, and I'm pretty sure that, our viewers will be applying the same checklist that you've mentioned. Simplify it for our viewers: business model, management pedigree, financials, and of course, what is the price at which they're offering it. These are the 4 checklists on Siddharth's mind. Of course, even utilization of funds, could be something that one should consider. But Siddharth, really appreciate you joining us today on The Money Show.
Thank you.
Okay, well, with that, we will wrap it up. We'll not wrap it up, we'll just wrap up this segment, but we'll be back with our Spend with TMS segment, where we'll be introducing the concept of cars on subscription. For those who want their own car, cannot afford it, but still want to shun public transport, this could perhaps be an affordable and a safe option as well. So don't go anywhere.